Chinese holdings of US Treasury bonds fell to $760.1 billion in October, according to data released by the US Department of the Treasury on Thursday, US time. It marked a fourth consecutive month that China's holdings of US Treasury bonds decreased, data showed. China's holdings of US Treasury bonds in October came down by $11.9 billion month on month, and reached the lowest point since February 2009. But the country still remains the second largest holder of US Treasury bonds in October. Japan, the largest holder of US Treasury bonds, also cut its holding by $20.6 billion in October, bringing its total holdings to $1,102.7 billion, the US Department of the Treasury data showed. The trend of China reducing its holdings of US Treasury bonds comes as China's central bank has been diversifying its foreign exchange reserve assets in recent years as normal operations, with increased purchase of assets such as gold. China's holding of US government debt has been below the $1 trillion mark since April 2022, data showed. According to data released by the State Administration of Foreign Exchange, SAFE, on December 7, China's foreign exchange reserves totaled $3.2659 trillion at the end of November, up $4.8 billion, or 0.15%, from the end of October. The rise in foreign exchange reserves was due to factors such as the rise in US dollar index, as well as monetary policies and expectations of major central banks and macroeconomic data, which collectively led to an increase in the price of global financial assets, said SAFE. In terms of gold reserves, the People's Bank of China, PBC, the country's central bank, has a gold reserves of 72.96 million ounces by the end of November, an increase of 160,000 ounces compared with that of October, data released by the PBC showed on December 7. It marked the first time that PBC increased its gold reserves in half a year. China's reduction of its US Treasury holdings to $760.1 billion reflects a strategic response to several economic and geopolitical factors. Diversification of foreign exchange reserves. China has been diversifying its foreign exchange reserves to mitigate risks associated with holding a large proportion of US dollar-denominated assets. This strategy includes increasing investments in other currencies and assets like gold. Concerns over US fiscal policy and debt sustainability. The expanding US national debt and fiscal deficits have raised concerns about the long-term value and stability of US Treasury securities. Reducing holdings is a precautionary measure against potential depreciation. Geopolitical tensions and economic sanctions. Amid escalating geopolitical tensions, particularly with the United States, China aims to reduce its exposure to US financial instruments to safeguard against potential economic sanctions or financial pressures. Domestic economic considerations. China may be reallocating funds to support its domestic economy, investing in infrastructure, technology, and other sectors to stimulate growth and reduce reliance on foreign assets. This reduction is part of a broader trend observed since 2013, with China's holdings decreasing from a peak of $1.27 trillion. The move underscores China's efforts to balance its foreign exchange reserves, enhance economic security, and navigate complex international financial landscapes.
After watching this video, don't forget to give it thumbs up and subscribe to our channel. Hit the bell icon to get notified whenever we post new content. Your support means a lot and helps our team create more videos like this. Thanks for watching.